up around 25 odd percent. But let's talk about a couple of numbers then. Shoppers Stop is in focus. That particular company reported what was a strong set of Q4 numbers with a strong operational performance as well. Gross margins expanded over 300 basis points. We have Venu Nair, the MD and CEO of Shoppers Stop, who's joining in now to discuss the earnings as well as the outlook for the business. Mr. Nair, hi, welcome to the show. It is a revenue growth of around 29%. Your gross margins are up over 300 basis points. Your operating margins have expanded significantly as well. Can you tell us what exactly went right this quarter? What were the same-store sales growth like? What was the private label revenue this time round?
Thanks for having me on the show, and good afternoon to everyone. We had a robust set of numbers, and as you rightly said, it is quite something that we are pleased with. It's a reflection of the strategy that we had put in place a couple of years back, and we've been consistently stuck to that strategy, implementing that strategy, and that's what's working. The three strategic pillars that we have on the back of the partnership that we have with the national brands, private brand having a robust growth in the quarter of 35%. Beauty, which is our second strategic pillar, growing again robustly at 29%. And our expansion, where we've now, in the quarter, we added one department store and one beauty door. And for the year, we added 11 department stores and 11 beauty stores. So all the three pillars firing, which is what's helping the growth that we are seeing.
Particularly wanted to talk about beauty. That's about 16.8% of your revenues. It's grown well. It's up 29% in terms of a revenue growth. But sir, there is a new competitor, and a competitor with very deep pockets. I'm talking about Tira. Are you worried about growth slowing down due to more competition in the fray? And will you look to up your investments into the beauty segment to ensure that growth remains and sustains?
The beauty market is just starting to evolve. And if I just give you some broad numbers, the total beauty and personal care market is 1.8 lakh crores. That's the size of the beauty market. Look at the premium beauty segment, which is the segment that we operate in. That's about 14,500 crores. And if you look at the total revenue of all of the beauty players put together, including us, and just to remind everyone, we are the largest beauty players in the physical space. Our turnover in excess of 800 crores, grown 29% year on year, as I just said. And even with that, the total share of the market that is being occupied is still very small. Add to that, the per capita consumption of beauty today is 980 rupees. Globally, it is 4 to 5 times that, between 2,800 to 2,900 rupees. So just three factors to look at. One is the opportunity for the premium beauty segment to grow from 14,500 and take a much higher share in that 1.8 lakh crore share. Second, the per capita consumption to grow from 980 that it is today, which is a fourth of what it is in even emerging markets, leave aside the developed markets. And hence there is enough room for a number of players to grow. It's actually good that we've got more players coming into the market, which helps to expand the market, as well as with our own distribution network that we had, which we have now set up, Global SS Beauty, where we have now 15 exclusive brands. It actually gives us the opportunity to expand our beauty business further.
So, the worry is that before the market expands, the competitor may actually eat into your share, which could hurt, right? Because growing the pie eventually takes some time. But go ahead, Ekta.
Oh, okay. Well, Mr. Nair, just wanted to touch upon the fact that, yes, there is competition coming in. The size of the beauty market is extremely large. But is there a need to possibly scale up in terms of capex? So what I mean is that, are you going to be launching many more departmental stores, standalone stores as we go forward? What is the target for FY24? And more independent tie-ups. For example, you have an exclusive tie-up with NARS. Any more that we can expect, and something which could probably be at a more rapid pace as well?
Absolutely. Expansion is key, and omni-channel expansion for us. We've opened 11 beauty doors and 11 department stores last financial year. This financial year, we will open between 12 to 15 department stores and between 12 to 15 beauty doors. And that's the pipeline that we have for the next 2 to 3 years coming. And that's a pipeline which we can already see. Adding to that, expansion of further doors through our global SS Beauty. We have NARS. We also have exclusive partnership with a number of L'Oreal International Distribution brands like Prada, Mugler, the Ralph Lauren, to name a few, and with the skincare brand Clarins, which is being relaunched in the country as we go forward. So all of these, the exclusive partnerships, higher number of international brands, greater number of doors, and a complete omni-channel experience through our SS Beauty standalone stores combined with SS Beauty app gives us a larger reach in the beauty segment as the market expands.
Any capex number that you have in mind for FY24 in terms of spend?
If I give you a indication from the last year, and that would be a broad guidance. So we spent 82 crores on new stores, and we spent close to 60 crores on renovation of our existing stores. And all of this was funded from internal accruals. And it's a similar number that we will spend for this year as well. And I'm again also pleased to report that it is all from internal accruals.
Okay. How much money are you getting from e-commerce right now?
We are an omni-channel retailer, and we look at our sales across online and offline put together. Our digital sales per se grew by double digit, even as our store sales grew at the rate of 30-odd%, which is not a true number because of the fact that last year, January, there was a COVID impact. But digital sales continue to be robust. It is omni. We know that over 80% of our sales today, the journey starts online, and that's why we continue to overemphasize on the customer experience on shopperstop.com, and that's something which we will continue to invest in even as we expand our physical stores.
Private label business, it's been growing at 35%. Will it sustain?
We would expect to not only sustain but grow that even further. Private label or private brands had its best year ever. It's the highest number of, this is the highest sales that we've ever had. Stop, which is our own private label, is a #1 brand. Life is, again, a large brand, 100 crore plus, and growing at healthy double digit. And even as we do that, we have other white spaces that we are still not catering to. One new brand which we launched during the quarter is URU, which is targeted at the plus size customer. And that's had remarkably sharp success, because of which we've expanded it from the 10 stores that we launched it to we're taking it to 50 stores. Similarly, footwear is another category where we see opportunity. We launched 2 brands, Fratini and Life. And going forward, we would also be launching Kashish in the footwear category. So that's the second space that we see as an opportunity for growth. So not only would the existing brands continue to grow in the space that they have, but also the newer brands that we would bring in. Being careful that each brand that we bring in is sharply focused.
Okay, all right. So we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's Shoppers Stop. The stock is up around 4.5%. But